Let's go through some of those big currency pairs at the moment and have a look both from a technical and fundamental standpoint as to where things stand. I believe that the first one you want to go and kick off with today is the Euro US.
Well, it's been such a Goliath-type battle, David, between the story of Europe, which is coming out of COVID, learning to deal with it better, versus the United States, high vaccination rates. So both sides doing well on that front. But of course, Europe has a massive trade surplus future outlook, as well as in the past, whereas the US situation, as we saw with goods data yesterday, continuing to plummet away to the negative historic lows. And that trade imbalance is something that's always going to be slightly favoring the euro. But at the moment, I guess the twin economic forces attacking the world are inflation and delta. And bizarrely, both of those support capital inflow towards the US. It's part of the reason why we're seeing US stocks go up. So therefore, it's very supportive of the US dollar. And some of that too is US corporations wanting to repatriate funds back from other parts of the world, including Europe, because they feel like in the United States, and it doesn't matter if you agree with it or not, fund managers in the US, corporations, the big global brands in the US feel like the US is managing the situation better than anyone else. And therefore, there is some bringing home of funds still going on. That's supporting the US dollar. That's why we've seen such a good, strong run of the US dollar in recent times. But the $64 question is it time for that to reverse? The euro chart there, obviously ticking up. It's still in that previous consolidation range, though, so it's not confirming in a price action sense that we have seen the low for the euro or a top in the US dollar. So I'd be very careful here that we might get from this point after this rally in the euro, a little bit of a sideways consolidation period for perhaps a few weeks.
Okay. How important is the Federal Reserve when it comes to this currency pair in particular? Because we've seen those yields come back a little bit when it comes to the Federal Reserve. Of course, we know the ECB is going to be on hold for a very, very long time. If the Fed turns more hawkish, say, in the next couple of months, particularly at that Jackson Hole symposium, could we go and see that euro come under some renewed pressure?
I think that would certainly be the case if I was speaking at Jackson Hole this summer, this time round, David, but because I'd be really telling them that inflation is not transitory, it's going to be even higher and it's going to last quite a long time, perhaps 1 to 3 years, and something needs to be done. So yes, that is the other key factor, as you're pointing out, between the euro and the US dollar. It's about expectations of when who will be first to be raising rates. And of course, that will be the US Federal Reserve. So very much looking for them to hike sooner than even they know. They don't realize how soon they're going to have to hike, because belatedly they'll figure out that inflation isn't transitory and then they'll panic and they'll hike more than they otherwise needed to have done.
Have you got a forecast on the euro dollar for the time being?
For the euro dollar, I really feel like in 1, 2, 3 weeks from now, we could be exactly where we are, but we could have seen a bit of volatility in both directions. I wouldn't be surprised if the euro continues to roll over for a weaker US dollar moving forward.